Today, the Federal Reserve lowered interest rates again, as expected. It was a quarter-point rate cut. 5 on your sides. Keely Arthur is here now with what this means for you and how the Fed is feeling about future cuts. Keely?
So today's move brought the U.S. Central Bank's benchmark policy rate down to the 4.25 to 4.5 range. It's the third straight time the Fed has reduced borrowing costs, bringing rates a full point lower than where they were in September. Hopefully, this will bring some relief for people carrying a balance on their credit cards. And if you make regular payments and have seen your credit score improve, now is a good time to call your credit card company and ask for a lower interest rate. However, don't expect the Fed's decision to do too much of anything, especially to lower mortgage rates or personal loan rates. Meanwhile, experts say news on the economy is mixed. The latest retail sales figure beats expectations, but inflation ticked up slightly in November. There are signs of cooling in the job market, and stocks are backing off of those all-time highs. So what does this mean for future rate cuts?
We see ourselves as still on track to continue to cut. I think the actual cuts that we make next year will not be because of anything we wrote down today. We're going to react to data. That's just a general sense of what the committee thinks is likely to be appropriate.
Powell said to cut further from this point, they want to see more progress bringing down inflation and continued strength in the labor market. Right now, the Fed is forecasting 2 rate cuts next year.
Well, Keely, you talked about the stocks. Let's talk about that. The uncertainty for the future during and after that Fed chair news conference led investors, that is, to start selling big time on Wall Street. The Dow fell more than 1,123 points, causing the Dow to finish down 10 straight days, the first time that has happened since 1974. The S&P lost 178. The Nasdaq had the biggest percentage loss of the day, down 3.5%, a loss of 716 points.